Welcome back to another episode of Together is Better. My name is Jeff Clark. I'm the CEO of Nitor Partners. And we're down here actually at SAP Sapphire here in beautiful Orlando. And I am very happy to have as a guest today, Erin Holloway. Erin, welcome to the show.
Thank you, Jeff. Appreciate it.
Right.
Welcome to Florida.
Thank you for having us, as always. So you and I have known each other for a very long time. It's actually a really interesting story. Why don't you share our first interaction with the audience here? It's kind of a good story.
It's a great story.
Yeah.
We did not start out on the right foot, did we?
No.
Like at all.
No.
I had heard so much about you. Like, Jeff Clark, you got to meet him. Jeff Clark, you got to meet him. And then we were at Ariba Live.
Mm-hmm.
Don't remember which city it was in.
It was Dallas.
Was it Dallas?
Maybe.
And we were in a meeting together.
Mm-hmm.
Like, we had been invited to a meeting with a big client, big financial institution, and we fought over a chair. We fought over a chair.
Yeah.
And I was like, who is this? Why does everybody like him? And we did not have the best start to our relationship. But Linda said, what happened? You know, she's like, that doesn't sound like Jeff. And I'm like, wow, let me tell you. And so she was like, Erin, you have to give him a chance. You have to give him a chance. He's truly one of the most wonderful human beings. And I'm not really sure where the smoothing over happened in our relationship, but you are absolutely one of my favorite people.
Thank you. And I feel the same way. Now, to kind of clarify for the audience, this room is super small. And I don't think the way that I planned the room, like there was only going to be a couple of people that was actually going to be in the room.
I think there weren't enough chairs.
Yeah. And it was one of the top 3 banks, right?
Yeah.
And then I didn't understand what your background was, which is super comprehensive. And you've been in the banking industry for a long time prior to that. So maybe why don't you share a little bit about your background, the reason why you were in that very important meeting, and then we can kind of go from there.
Sure. So I started my career out at JP Morgan, like right out of undergrad. Very fortunate to roll straight into a job at a big investment bank. And I was there probably almost 20 years.
Yeah.
And wore a lot of different hats. I mean, in 20 years, you do a lot of different things. Did foreign exchange, did international banking, did treasury. And then my last job, my last 2 years, I was running a competitor to Ariba in the procurement and e-invoicing space,
right.
working capital.
Yep.
So I always had a financial element to it, but they had bought a partner and wanted to kind of get into that business. In I think it was 2007, they bought it. And so that was my last 2 years at JP Morgan before then joining Ariba. And I was only at Ariba 6 weeks before they announced the acquisition by SAP. So it was big company, little company, back into big company, which was totally fine because I'd been through 7 or 8 mergers or acquisitions at the bank anyway. And so that was no big deal. And then spent almost 10 years at SAP doing a lot of different things as well. But my last role was as vice president of business network strategy.
Yep.
So, setting the strategy as the business network expanded beyond Ariba, because there's obviously more than one network. They're becoming the network of networks,
right.
Really. And loved every single day. I did absolutely loved every single day at SAP because I got to work with you.
Yeah. We've talked about that. Some of the greatest people in the industry that we came across either, prior to the acquisition by SAP, through the time that we all had at SAP, and then through all the different partners and everybody that touches this ecosystem. For some reason, it's so expansive. There's just an enormous amount of great people that we're all fortunate to kind of come in contact with at some point in our careers.
Yeah, and that's one of the things I really enjoy is the caliber of people, right? They all have their expertise, and you need a lot of expertise in a company as complex and matrixed and has so many products like SAP, and everybody needs to have their specific niche, and they've got the best of the best. So loved every single day, and only left because I was given a really great opportunity to become president of a fintech, which married my financial background with my tech background, and did that for a couple of years. Just like really tough times in that particular industry.
Sure.
And now I do consulting, and of all places, completely different industry. I consult for the EV industry.
Right.
So, I mean, like, who knew?
Which is still technology.
Which is still very much technology.
Very much technology driven, right?
Very much technology driven.
A lot of change. I mean, it's certainly the leading innovator in a lot of different areas. I want to go back, though, a little bit to the transition from JP Morgan into Ariba. And at the time, Ariba was very focused on things like working capital, right? Early paid discounts. As you look back at the industry now and you see this kind of evolution, what do you think, really is kind of maybe the future of, how payments in general are going to work for, an SAP? Are they going to get back into that more meaningfully, do you think? Or is it going to be kind of an adjacent strategy for them?
Well, I'm going to go back to the working capital element first, right? Because, their foray into it was the Ariba working capital strategy. And then they've acquired Taulia, which is best in class. That's one of the SAP strategies, I think, is when they do acquisitions, they choose best in class partners. And Taulia, in my mind, is absolutely best in class. And even though there was a little bit of overlap, I think that Taulia, it was truly their core bread and butter. And they had a more expansive offering. And I think Ariba took a little bit of a dip just because of what was going on with interest rates, right? You've got a macroeconomic element to it with working capital and demand for dynamic discounts. So when it's cheaper to borrow money from your bank than take a discount from a supplier, you got to weigh the options. What's more economic? Now that interest rates are back up, I think there's a lot more, running room, and it's a lot more attractive, for suppliers to, be interested in taking discounts and being financed by their customers. So I think in that regard, they've done a great job of doing that. They've touched on the payments space before.
Remember,
it's hard though.
It's
really hard. Because, they've got Ariba, which is this great red thread through the procurement process, right? You start at the very beginning, it goes all the way through. And then when you go to affect the payment, you have to jump out of the Ariba solution and into your banking solution to affect the payment. And so you've got information in two different places now. And so how do you marry that? So I think there's absolutely, some room to build a better mousetrap and find that final piece of the puzzle. They've tried. I think there's some stuff in the works right now. But if they could really solve that, I don't think it's that far off. Just because think about the way payments have evolved and the way consumers particularly have shifted. We don't go to the bank anymore.
Right.
We barely drive through the ATM to get cash because we're almost a cashless society. In the Western world, and people bank with things that aren't even banks. Right? They bank with, Chime and Dave and, companies that aren't even banks. They have financial institution partners behind them, but that's not the bank.
Right. It's the experience that
that's a fintech.
Correct.
On the front. And people have no problems putting their money there if they're getting, the best interest rate or it has a product that they're interested in.
Right.
Do they have the breadth of an investment bank? Absolutely not. But a lot of people don't need that.
You've had a very extensive background in payments throughout your entire career. And SAP and Ariba had a really key strategy for a long time around the payment space. What do you see with Talia today and kind of the evolution for payments within the SAP ecosystem?
So they did touch on payments for a bit with a product called Ariba Pay, which I actually thought was a really good product.
I do too.
It was a wee bit before its time.
Yep.
In terms of, not that it didn't have adoption, it was just, the payment structure in how it was positioned.
Between the bank and then between that at a platform software level.
That's right.
Okay, I'm moving in between two different platforms for the most part. The money had to go move on the different rails.
That's right. But the point was, what made it a better mousetrap was the reason why they had to have that separation, right? Which you always had to have.
Right.
You've always had to have, a stop at the almost ready to pay so that the bank can affect the payment, right? You had a bifurcation at that point in time. How they built the better mousetrap was by putting the firewall in place, right? So, I need to pay supplier 123, and on the Ariba side of the firewall, it's supplier 123. But on the financial institution side, it's supplier ABC. So you've got a firewall in between, so the data isn't contiguous, right? So therefore, there's your firewall for your privacy. So that supplier is known, as a totally different identification than where the transaction took place, which was how the privacy took place. And the great thing is that the data was on the other side of the firewall, so that the customers didn't have to house it within their four walls. So from a security perspective, having banking information, within your four walls, there's liability there.
I can remember the contracts. I remember because I was part of one of the first transactions, and it was unbelievably comprehensive, like because of the fact that it was with the financial institution and we were moving money between A and B. That was a very laborious process. And I thought it was to me, it was an indicator that, oh man, this is going to be kind of tough, right? Longer term to try to get something done.
Yeah, for sure.
Right.
And, Taulia's got some fabulous products. I mean, I consider them best in class. So when SAP does an acquisition, they only buy best in class.
Why do you consider them best in class?
Because they're very focused on what they do, right? They do working capital, they do supply chain finance, they do accounts receivable financing, and they focus on it do really well. And on the backside of them, they've got a consortium of the financial institutions.
Right.
So they've got that platform built in. So regardless of where in the world it is, what the appetite is for the client, right? They've got a financial institution who wants that transaction,
right,
who wants to be able to do it, right? So they've got the resources for a nice flow of funds and continuous business for both the customers and the suppliers, and regardless of where in the world it might be.
Do you think the banks, because when I looked at supply chain finance, to me, the harder part, like the easier part was really the working capital and the early payer discounts, okay? Customers had an easier time getting their head around that, and generally that was unlocked at a workflow component between AP and Treasury, right? They would set the rate and they'd be okay with it, accept the payment. Supply chain was always more challenging because, the primary partner bank of the institution or the buyer, they had some type of another arrangement that was in place. And in some cases they would bundle that in with, a credit revolver or whatever they were doing as a service. So do you think that with Talia, it's a little bit different because it's all encompassed into, kind of one package provider that can give them all the optionality that they need?
It gives a lot more flexibility, and I'll tell you why. Working capital and dynamic discounting, that's for the masses.
Right.
Anybody can say, hey, on this particular invoice, yes, I'll take a discount,
right,
to get paid early. Anybody can do that. Supply chain finance is upper crust.
Correct.
You as a customer have to qualify in because you are replacing your supplier's credit with your credit. Your credit's on the line because the bank is financing it, and then you're the one on the hook in essence because the bank's fronted the money.
Right.
You haven't fronted the money. The bank has fronted the money. So you have to qualify into those programs. That's not for everybody. Those are for the Caterpillars.
Smaller.
Yeah, those are for the Caterpillars of the world and their client base.
Correct.
And then of their client base, only certain ones are qualified in as acceptable. But anybody can discount an invoice.
Yeah.
Like that's for anybody, which is great. You need to have an option for all of your suppliers should they need the money, because a lot of them don't have their own working capital lines at banks. And at times they might be too expensive. And this is a great option for them to have. So
in this high inflationary environment in particular, I personally see more of a trend where that is a lot more attractive, right? And the suppliers are constrained right now because the banks aren't lending, right, at the rate that they should. So they're getting squeezed. But I'm also seeing too where the big buyers are flexing their muscles more. And you're seeing net terms getting pushed out, sometimes to ridiculous amounts, like net 120.
Yeah. Well,
if you care about that supplier, they're not a commoditized supplier, then you're really killing them from a cash flow standpoint. So, I think there needs to be more tools. And if you talked about, there's a lot more options available out there, crypto also being one, which I want to get into here in a second. But as you think about Talia just in general, and you think about customers, even in S4, there's certainly going to be a good home, I think, for them to explore that more fully, right? As they go on their digital transformation, like what else are you doing in the payment space?
Absolutely. Well, and the Office of the CFO, I think, is an area which has deserved a lot more attention than it's gotten in the past. And I feel like it's finally getting the attention that it deserves, because why are companies in business? They're in business to make money.
Right.
Right. And, where's the money handled? The Office of the CFO. Who needs the most technology and the most levers to pull to make sure that they can make the most money? The Office of the CFO, where the money sits. Right. They're the ones that really should be given a lot of access to technology to create greater efficiency, because we're all being squeezed.
Yes.
Right? Consumers, companies, it doesn't matter, what aspect of your life, we're all being squeezed.
Yeah.
And we all have to do, more with less.
I saw and actually on one of the earlier episodes, we talked about this because we were talking about central finance and the role of the CFO going forward. Mm-hmm. And what I am starting to see, and I think you're seeing this more commonly now, is that as you look at the ascending CEOs, the majority of them are coming out of the CFO space. And to your point, the types of information and what they're involved in, which is effectively everything, whether it's innovation and R&D, it's all, of course, things like M&A and operating the business from a cash basis or accrual or whatever. They see everything now, and they're really becoming very strong CEOs because of the fast-paced transformation that's happening more broadly. So I think I agree with you 100%. I think the office CFO becomes to be even more pivotal in a rougher economic time like we're having now.
Yeah.
To where choices become a little bit more limited. The risks are absolutely elevated out there right now. And I don't know if that those risks change into something less risky. I see the world getting more and more risky. Just at the macro level, economic level, diplomatic level, you name it. It's not rosy. It's out there. One of the interesting things that's popped up has been the rise of crypto. And, I loved how you transitioned in your career from this deep finance background and platform background into doing something in crypto. Why did you make that decision?
It really was the best of both worlds, as I said, right? Because it's both financial institution, as well as a fintech. Mm-hmm. And we handled, both currencies, right? So cryptocurrency and then fiat currency, which is traditional currency, right. Dollars, euros, sterling, that kind of thing. And we managed $3 billion, $3 billion of assets under management. And all kinds of cryptocurrencies, like 170 different cryptocurrencies, big, small,
Is that too many? Do you think?
It's too many. Okay. You know what's going to happen? There's going to be a massive consolidation in the end.
Yeah,
you're going to be left with maybe 5, 10 in the end that are actually worth their salt.
Yeah.
That people have confidence in, that have the right infrastructure underneath them, the right ecosphere,
right?
As we call it, and there's a lot of still like this waiting game and holding breaths of what's going to happen, because the whole point of it was to DeFi, right? Decentralized finance. I don't want my money in the big banks. It takes too long for my money to get from one place in the world to another place in the world.
Not as portable.
Not as portable. It costs too much money to move my money. Like, why does it take 2 days and it costs me $100 to move my money?
I did a wire and it cost me $60, right, last week, right? And so I looked at that and I was like, how is that even possible now?
Yeah.
Right.
But the point is it was lack of control, right? In defiance of the centralized bank. The centralized banks have too much control, but there's a dirty little secret in crypto.
What's that?
You can't get in or out of crypto without using the banks. They are the rails that the money moves on. It moves in and it moves out. You just can't. Like, behind all the cryptos are other banks. Now, some banks are crypto friendly, some are not, and that's okay. Some say that they're not crypto friendly, but on the backside, they're building crypto solutions.
Right. BlackRock, right, now investing heavily.
You got to play both sides of the coin depending on how legislation is going to go, where things are going to fall. I never thought it would take this long to get some answers out of the SEC.
So a lot of different businesses, I think, are really considering crypto. Who are the early adopters and why? And then where do you see, and do you think big companies are going to have a crypto strategy at the office of the CFO?
So the early adopters were what I would call fringe industries. So cannabis, the adult entertainment industry, gambling, weaponry, companies that would normally be very cash heavy. And they wanted a way to be able to move money and transact much more efficiently than they had been. Because think of the fees that it costs those industries to be a client. Right? They get charged a lot.
Because they're high risk and bad exposure, reputational risk.
Reputational risk. People don't want to do business with them necessarily. So the banks that they can find to do business with them, it costs a pretty penny. It's not just regular pricing. So they were the first early adopters, and they've done really well. And there are banks that embrace those industries. And there are particular banks that have been chosen by the regulators to bank those industries because they're highly regulated. That bank is highly regulated, and they can kind of keep an eye on it. It's kind of an easier way to monitor them. But there's a lot of new banks. You don't have de novo banks pop up all that often the way they used to, but there are quite a few de novo banks, especially in the Wyoming area, because they have very friendly laws, especially to crypto, where you need to have this, like my company was in Nevada, and we had a banking license in Nevada. Nevada is also very friendly.
Sure.
So that's who the early adopters were. There were a lot of companies taking kind of like a wait and see attitude because they're waiting for regulation to come down because they don't know what the rules are. Because right now, like, there are no rules, which is the problem.
Which is kind of the benefit too.
Yes, right. But it's a double-edged sword,
right?
People can get hurt. And we've seen a lot of people get hurt, right? Because there are no guardrails. So you need the rules and the regulations so that people know where the guardrails are, right? How can I play the game if I don't know what the rules are?
So who should set the rules? Because the way I look at it is you have a conflict of interest to some degree if you have the Treasury, right, department or others that want to get involved in it because they want to maintain control. And this is like the Wild West. Right. So they've lost oversight. They don't know where it's going. I mean, if you look at the monitoring of transactions, I mean, you're hearing now about kids that got a lemonade stand that, have to go report if it was $600 on Venmo.
Right.
Right. Like just over the top regulation on that. So do you think that Treasury will be the one that sets the rules, or is it going to be the marketplace?
I mean, I think everybody's waiting for the SEC to set the rules.
Yep.
The thing about the blockchain is, like, it's all public ledger. You can see every transaction, right? Mm-hmm. So you can see every wallet. You got to know whose wallet you're looking for, right? That's a little bit of a needle in a haystack.
Because it can be anonymous.
Well, because it's a wallet address.
Right.
It's not necessarily a name. It doesn't say,
right.
ABC Corp. But if you know what wallets you're looking for, you can see the transactions that are happening in and out of that wallet. So there is some public oversight, right? Mm-hmm. That's the whole point, is that it's public ledger. And that's what people like. Everything happens by consensus. And that's how some of these ecospheres work, in terms of the blockchains being put together. And then something called like gossip, where you gossip a transaction and it gets gossiped and then it's validated. So you have to validate the transaction.
What does that mean, gossip? Like,
it means you're sharing that information. Somebody else is also then validating what you just said, almost like telephone. Almost like playing telephone. And the message has to start and end and be the same.
Okay, so it's a validation step?
So it's a validation step.
Interesting.
Validate the transaction before it gets posted. So there is some self-regulation and self-guidance happening now because everybody else is waiting and holding their breath for proper regulation to be put in place. Now, having come from a large financial institution like JP Morgan, I'm a big fan of regulation because that's how you protect people. And protecting consumers, I think, is the most important thing, right? My fellow citizens, my fellow Americans. You hear all these horrible stories about people losing their life savings, older people getting taken advantage of. Nobody wants that. Nobody wants that.
I think the balance, though, is really important because I see more and more control being exerted over every step in people's lives. And the one benefit with cash is there was some anonymity to it, right? Like you could go buy a car, with cash and your kid had done lawn service or whatever and saved up. And, it doesn't have to have direct oversight because the problem with all that too is then everything that is happening is taxed within that.
That's right.
Right. And so there were some benefits, and especially for, people that are lower income, there was an advantage of that. They may have a second business where, the yard sale, right? The traditional yard sale, now you got the IRS, wondering, okay, I want my piece of that. So I think there's a trade-off with that I think people found very attractive about crypto, to where if you're going to replace cash, there needs to be some methodology to where you have some, way to be anonymous in that for certain types of transactions. Now, granted, there's so much abuse that can happen in that with, sex trafficking or drugs or whatever, right? Awful things. So I get the trade-off, but it's kind of that safety or freedom type thing, right?
I don't think you're going to have to worry too much. I don't think cash is going away anytime soon.
Okay, so I was going to ask you.
Yeah, no, cash, and I'll tell you why. And it's because there's a whole section of Americans of the world that are underbanked and unbanked. They live in places and in communities that they can't get a bank account, right? It's not accessible to them. They're not desirable as a client. They don't have access to those types of accounts. So they do everything cash. So you have to make room for people to, have access to their money. And if the only way they can do that is through cash, you can't take that away from them.
So if you look though, there's where I would challenge on that, because you see, okay, how much loose change do you see in the world anymore, right? After COVID in particular, right? They wouldn't take any change. And in some ways, I kind of look at that movement of, okay, we don't want to exchange physical money. And now it's like hardly anybody carries any cash. My dad would always carry a $10 or $20 bill or something. And, as a guy, I always carry, a certain amount of money or whatever. But I wonder if it doesn't just shift from, okay, that's physical cash to one of the other cryptos, right? Where you could have it on a digital wallet and that's your spare change, or that is your, less than $100 that you've got, but it's in some, cryptocurrency instead. Do you think it'll get to that? Or do you think there will be circulation of fiat, physical paper currencies?
I think not in our lifetime will we see the retiring
certain parts of the
cash.
world for sure.
Right?
Yeah.
It won't be in our lifetime.
Right.
Again, because not everyone in the world has a smartphone, right? A lot of the world does, but not everybody in the world has a smartphone.
Sure.
And then you have to have an account that you can put in it, which means somebody has to consider you worthy of being bankable. So there's a trade-off. I think it may get there someday, just not in our lifetime.
Okay.
I think because the way we're going with this, like I thought we would have had an answer by now. I thought we've had a set of rules, set the guidebook out.
It's been over a decade now.
It's been a long time coming.
Yeah.
You can only kick the can down the road so far.
True.
But everybody's still waiting. Everybody's still waiting for the rules, because then once everybody knows the rules, then they're like, now I want to play the game because now I know what the rules are.
So do you think the central banks, right, are going to play a much more pivotal part in that as well? So if you look at, their ability then to determine how you can move money, and again, it goes kind of back to, who's going to control the process. Are they going to have things like central bank digital currency, right? Or Fed coin, or whatever they're calling it today. You hear more and more about it. There's some legislation, some executive orders, right? It feels like they're in beta test. I think I saw some reports on that. What does that mean if that comes out? Is that going to be a portion of the economy, or is that going to consume it and be like, okay, we're all going digital now?
Well, I don't have a crystal ball.
I know.
Right?
But
I think if it goes, it's going to go fast.
That's what I think.
Right? And a lot of people are playing both sides of the coin right now. Like Jamie Dimon, for example. I'm a huge fan of his. Used to work for him. He says one thing on stage, but behind the scenes, there's, he's got his Onyx group set up in the background to actually, manage that entire line of business. Right? So either way, he's ready. Right? If it goes one way, he's ready. If it goes the other way, I told you so. So I think a lot of people are hedging their bets and getting ready for whatever may come. Now, if it comes fast, I wouldn't be surprised. It'd be kind of like a tidal wave. I think.
Would it require a catalyst? Like, let's say a massive economic downturn or something catastrophic, because people are slow to change anyway. And that to me is a big leap for a lot of people. To your point, like, what if you don't have a phone?
Yeah.
Right? Or something along those lines. To me, the logical step would have to be in some progression based on the acceptance of technology. But I mean, I just flew down here. I was at the airport. I was at Hartsfield, world's busiest airport. Every single person was like a zombie like this. So I question, like,
it's a societal issue, though.
It sure is, no doubt about it. But I think people, if that's the requirement or the prerequisite, I think they got it.
In
Most
America.
people. In America. Now, again, separating out the rest of the world, just talking about the U.S., I think we would be the first.
Yeah.
Right? In some capacity. Okay.
It'll be interesting. Like when it happens, I think it's gonna happen fairly fast. But it's it's hard to say when it's gonna happen, because I thought something would have happened by now. What you've got right now, though, is plenty of people are in crypto, but they're in it as an investment.
That's right.
Right? It's not actually a transferable, like everyday currency for, trade transactions to happen, where I can go to a retail store. Now, there are a few retail stores, supposedly Chipotle, you can pay with crypto. Some of the higher end, what I would call like Rodeo Drive luxury brands will take it, because think about it, they're selling high end things. Like somebody's going to go in and buy, a Birkin bag for $30,000. They'll take crypto if that's how you want to pay for it.
How's that taxed?
That's an option.
Is that taxed then in that transaction?
That's a good question. It has to be.
It would have to be.
So it's probably
You'd
whatever.
have to report it.
It's probably an FX. It's a foreign exchange rate, just like any other foreign exchange.
Right.
Like if I went to Italy and bought that bag, and I used my U.S. credit card that's in debit in dollars, but it got paid in lira, it would pay whatever's the local VAT tax. It would do the same thing.
Right. Yeah. So it always begs this question when I hear about central bank digital currency, or the blockchain ledgers and all that stuff too. Around, you hear the talk about social credit scoring and the ability to limit what people buy, right, based on that. Now you see that in authoritarian cultures. You see that's real prevalent in China, for example. Is there a risk that if we move towards that, right, where you have a central bank digital currency or something along those lines, that can then be tied together to whether or not you're allowed, right, to make a transaction?
Oh, you can shut it off today.
Yeah.
You can get your accounts frozen today.
Yeah.
If they think you're doing something shady, dicey, kiting checks, laundering money, you can get your accounts frozen today.
Yeah.
They already have that ability. So it's going to be no different, like when it actually happens.
Except for the fact, in my mind, so if you're 100% tied in, let's say through the government, and their every dollar is through them, right, and every dollar is taxable, I think there is a potential for that. That's one of the things that, as I look at legislation that's coming out, okay, that's great. That's the future. If that's how we're going to, create banking and have that whole system, I want that kind of piece to go along with it. There is a big fear for people around the adoption side of it.
Yeah.
And how you do it. But I also look at crypto too, almost like precious metals. All right. Now, investment-wise,
Digital
crypto
gold, people
crushed
call it.
it, right? I mean, if you were the early in on Bitcoin and you're at $65,000, per coin versus, a gold, American Eagle or Krugerrand or something along those lines, there's no comparison. Yeah, some bullion, but no comparison whatsoever. But to your point, I can't take that and go to the bodega, right?
That's right.
And, buy something like a soft drink or, a piece of fruit or something along those lines. That's just not there yet.
Yeah. It's all going to be about transferability.
Correct.
Awesome. Can I transfer this? Can you accept it? And then it becomes a real currency. Right now it is a little bit funny money, right? I consider it only an investment right now because it's not actually transferable currency for transactions.
So I want to switch gears a little bit. So one of the things that I always admired about you was that you got heavily involved in the women in leadership movement within SAP, and you led that. I participated in some of those events as well. Tell us a little bit about why that was a passion for you, how you got involved with it, and I'll ask a few questions beyond that, but let's start there.
Yeah. So having started my career in investment banking, heavily male-dominated industry, moved into tech, also heavily male-dominated industry, that's very comfortable for me. That's not comfortable for all women. Right. Necessarily, but they want to do good work and work for good companies. SAP is a fantastic company, phenomenal company. And when we joined SAP through the acquisition, there had already been started something called the Business Women's Network that started in Germany, which makes perfect sense at headquarters. And they had, a dozen or so chapters around the world. I joined the Chicago chapter, that's where I was living at the time, and became a chapter lead. And while I was chapter lead, they decided, hey, this is something we should really grow. Let's start a global team. So I was the first global lead. And I was a global lead for 6 years, and we grew exponentially. And one of the things that I was really proud of that I was able to do with the Business Women's Network is I had a big push for the fact that it's not just about women. It's about SAP, right? It's about how do we make SAP better as a company for everybody. And my tagline was better together. Yeah. So because we're better together. And I know I invited you to a breakfast one morning we had a BWN breakfast
Right.
at, I think it was FCOM in Vegas. And it was a big deal to me. My theme that year was bring a male colleague, because I wanted more men to get involved, because, the BWN isn't just for women of SAP, it's for the women of SAP and the men who support those women. And so it was really important to me that the men felt comfortable with it.
Right.
And that was a kind of like a real stepping stone. It was a big leap for SAP to get to that place and to get the men supporting. It wasn't just a women's networking group. It was about empowering the women to be a better company, right? So that we all boats rise with the tide. We all succeed together, right? So when the women of SAP are happy, it makes the company better.
Well, everybody wins, because you're taking the most capable, right? It was truly a meritocracy, right? Where it was phenomenally smart business women, and they were the right person for the role.
Yeah.
And so they were leaders, they were the innovators. And, for me, what I loved about being invited to that too was, as you looked out at the kind of the mosaic of all of these great women that were out there, you're like, oh, that person, oh yeah, she's in charge of this. Oh yeah, that person's in charge of that. That person just landed that huge client. Unbelievable amount of talent. And, as a dad of 3 daughters, it's very inspiring for me, to see women working together in that capacity, but then also working with men and partnership to say, hey, you know what? We're all in it together, right? Whatever barriers there have been in the past, that's over, right? It's all about us working collectively together towards a single outcome.
Yeah.
And so that was really cool what you were doing there. And everybody rallied around you. I mean, there was, and so many people that you mentored, as well. If you had to go talk to somebody just starting, a young woman in the business career right now, what advice would you give her?
Well, I would give the same advice whether it was a young woman or a young man.
Right.
Right? It's find your tribe. Right? Find your people. You are my tribe.
Same.
And find the people that are squarely in your tribe. They've got your back. They support you. You can go to them with your problems. Like, hey, I need some, I've got an issue. I need to bounce some ideas off of you. I'm trying to troubleshoot this. Can you help me think this through? Yeah. Because they bring different perspectives, different experiences, and they don't have to be peers necessarily, right?
I agree with that.
They can be any age, any division, somebody you just connect with. That's the most important thing, is fostering those connections. And just, it helps so much in so many aspects of your life, not just even your career. It helps you as a person. And that's one of the things I really feel is important to bring to your work, is bring humanity to your work. I think all too often things are a little bit too cutthroat, especially coming from the investment banking industry. It just is.
Wall Street cutthroat? What?
It's kind of a rough place, But I think it's really important that you bring humanity to your work every day, because you just never know what people are going through.
No,
you really don't. But yet they show up every day and they do their job. And I think it's really important that you show compassion, you show understanding, and you look for those cues when people need help, because they don't always speak up. There's a lot of people that yes, will pick up the phone and call me and say, Erin, I feel lost in my career. I feel unsupported. I don't know what my next move is. Can you help me? And I will champion behind the scenes,
right,
and be that cheerleader.
You've been so good about that as well,
but
as an advocate for people.
Speak up.
No, they don't.
On their own behalf.
No,
they suffer in silence.
Yeah, they do.
So you have to look for those clues, because you just need. It just takes one. You just have to be that one, right? Everybody needs one person.
I think I agree. First of all, and men suffer a lot in silence.
They do.
So a good friend of mine, Brett Hurd, has started this group with this another man, Sean Lesser. It's called The Real, and it's about men's mental health. Because a lot of times, it's kind of our culture, who we are and all that. You suffer in silence, and I do a lot of work with special operations guys that are coming out of the service, and helping them transition to find meaning. And I think a lot of it is around what you just nailed: mentorship, finding your tribe, right? Because in those groups, you have to find those people. And it's hard to do in some cases in corporate America, because people sometimes feel like they're angling. The thing I loved about SAP was that it was more, you had a better ability to find that group and to gravitate to them, and they were loyal to you. At least my experience, not for everybody. That's, I mean, just speaking for me, and I know you have a similar experience as well. And then I love the difference that you mentioned about age, because, I've had younger people that I've really admired, that I've found, that I would go to, right? Hey, I don't understand this. Like, what do you think? And so there needs to be an inverse, I think, relationship with it. But the thing that I wanted to jump to next from that was, as you think about being that human approach, which is the function, taking you, because I know that you're a faith-based person just like I am, right? A Jesus follower. And so living that life and following what we follow, who we follow in the corporate world is not always easy. How do you view being a person of faith, whatever faith you are, and living that in a corporate environment? Are the two compatible?
Yes, I absolutely think they are.
Yeah.
And I think it's important that you bring that part of you to your job, right?
Walking the walk.
Yeah.
Very much so.
I absolutely think you have to bring it, because otherwise you're not able to bring your whole self. And like whatever your whole self is, right? But for you and I, that's our faith is part of what makes us whole.
Yeah.
And I think everybody needs to be able to bring their whole selves to work, and feel accepted and supported and recognized for your talents and abilities. So absolutely, there has to be a place for it.
Yeah, I agree. I mean, it's about authenticity. For me, it's about, humbleness, gentleness, right? And you could still be a tough business person, but you're walking in purpose, and you're leading by example on who you are as a person of your faith, right? And so I agree with you, and I think it's time for people to be more bold about that in their life and in the business community, and not being exerted, like overexerting it onto people in any way, right? But it's just about the reflection of your character.
Right, being principled.
And being a principled person. This is what I believe. And I think sometimes corporate America tries to force you into this, you have to be something else. And I just don't believe that gets the best performance of that person, the best genuine person that you want representing your business. Let them be that.
Yeah.
And I think what you're going to find is more people were like, oh, I really want to, be who I am in my faith as well.
I 100%.
So I think the time's changing a little bit, where that was more subdued. I think it's now time for that. And people are feeling more confident that, hey, it's okay, right? And you should.
Absolutely. And I think that's important. Like, we are who we are.
Yeah.
Like, just own it.
Yeah.
That's one of my biggest things that I tell women. I'm like, you got to own it. Own who you are. Own your successes, right? We as women, I'll tell you this, we as women, we are too quick to own our failures. Oh, I'm so sorry. That was my mistake. I'll do better next time. But, with our successes, like, oh, somebody says you did a great job. It was a team effort. I couldn't have done it without the rest of them. And I tell people all the time, I say, don't lessen yourself. You crushed it. Own that. Own that you did it. Yeah, thank you so much for recognizing that. I appreciate that.
Right.
It was part of a team, but I did my part. Like, own that. And I think all too often, we're too quick to, be hard on ourselves and not give ourselves the grace that we deserve. So I just feel like I've seen a lot of women do that. And when they do it, I stop them and I say, hey, no. You on that. Like, you did that.
I've seen
you crushed it.
Yeah. To build that confidence, right?
Don't
that,
worry.
hey, that's who you are, and be proud of that.
That's right.
Yeah.
You got to own it.
Yeah, for sure. Yeah, I think we're at an exciting time. I think, in humanity just in general. I mean, there's an awakening in a lot of ways happening, where, I think we're seeing each other in a different way, just men and women, and, what we all bring to the table, and, the way, God's created us is how we believe, and the equality that brings into the world. So it's an interesting time for sure.
I can't tell you how much I appreciate having the chance to talk to you today.
Oh, pleasure mine.
I love this series that you do.
Thank you. I appreciate it. I'll tell you, this was one of the favorite ones that I've done, because you're one of the best people on the planet that I've had the pleasure and the honor to work with and get to grow with in our careers. So I just want to tell you how grateful I am for everything that you have brought to my career. Thank you for that. To so many other people's careers, right? To everything that you've done for women leadership within SAP. And thank you so much for being a special guest on the show. Thank you so much, Erin.
Oh, it was such a pleasure, Jeff. Thank you.
All right. Thanks. If you like this episode, please click on the link below, repost it, and share it out on LinkedIn.